Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Discord Trader Lab community? Thank you, Marty. And how we doing in YouTube? Are we percolating over there? Thank you, Sniper. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Appreciate you stopping by the lab today. Today we're going to talk about the weekend attack by the U.S. military on Iran's nuclear reactors. And while this is a significant event from a geopolitical point of view, as traders, we need to focus on how do we participate when we have potential disruptive events, whether it's fundamental events, whether it's geopolitical or any kind of external outlier. So we're going to talk about market mechanics. How does the market work? Why does it do what it does? How might you get in alignment with it? And one of the ways we attempt to do that is by only interacting with the other participants when we have a statistical edge. And it's all based on trade plans. This is really the basis of the Trader Lab. So you understand the business of trading, not the fantasy. And many of us, when we hear news, whatever it might be, we make an assumption what the result of that news will be. I'm going to suggest that you don't think like other retail traders. Instead, the market processes inputs, and if it needs to make an adjustment, it will. Now, some inputs, of course, are surprising and they disrupt the market. Other inputs come in, and if there is a surprise, subject to your understanding of market mechanics, if you can get in alignment with it and you have a vetted structured trade plan, you might be able to capitalize on it. And that's what the Trader Lab is all about, helping you understand the business of trading, not the fantasy. And if you're interested in the business of trading, you might want to visit Trader Lab. There is no cost for it. So let's go take a look at what we've got going on here in just a moment. Here, one little thing. Whoop, there it is. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Grab a pen and a piece of paper. I'm going to give you a couple notes, and then I'm going to review the current condition of the market and why in the Trader Lab the primary trades this morning so far were on the long side. And of course, that doesn't mean you shouldn't be doing something different. There is no right or wrong in trading. What there is in trading is probabilities and statistical edge. That is the business of trading. So if you have a plan and it has an edge, even though the outcome of any specific interaction with the other participants is random, if you have an edge over time, you may have an opportunity to extract the dollars from the other participants. And of course, that's up to you, right? Whether or not you operate with an edge. And it's also just up to the random nature and distribution of the outcomes of the participants, just like in the casinos, the outcome is random. But if you only interact when you have an edge, over time, if you have the discipline to execute the edge and you just accept the random outcome, which I know is difficult because of our emotional attachment, then you may have the same opportunity as the casinos do to extract the dollars from the gamblers. So write this down on your pen, on your piece of paper. Today, we opened higher inside of yesterday's or Friday's range. Now, we did have the attack on Iran over the weekend. So what does it mean to open higher? Is that what you anticipated? And how did we know, starting off today, that longs would be the dominant side to participate in? I'm going to answer those questions for you, but here's something that might help. Let's start, as they say, so we can follow the yellow brick road. There is a roughly 98% probability we take out either the first hour's high or low. That is called the IB, or initial balance. There's a 97% probability we take out either the ETH high or low. And you're going to see how all this fits into today's plan. We have an 82% probability-ish we will take out either Friday's high or low. We have an 81% probability we take out the ETH volume point of control. And if you don't know the terminology, don't worry about it. We have a 72% probability we'll take out the previous value area high. We have a 68% probability we'll take out the previous point of control. This is Friday, and that's the previous point of control. Let me point out a little bit more. There's a couple more of these, by the way. Let's see. So we know about previous high, we know about ETH high, and anything, of course, can happen, but that's the lay of the land. So let's remember what our probabilities are. So this 68 and 58 in here is the highest volume price for this whole consolidation. Swing low, swing high, sweet cherry-o. And so this is orange line is retail for everything. If we slice this down to another swing or fractal, and I think in fractals, so I slice and dice the market to what I need to see the behavior inside of these. So what do I know from Friday? 67.25 is too high. What else do I know? 60.10-ish might be too low. What else do I know? This price in here was too high, and 35 is too high. So I have some too high, and the other part I know is there's buy stops above these highs. And remember, I have a what probability? I have an 82% probability to take out either yesterday's high or low. Now, and of course, past performance is not indicative of future results. You got to vet everything. This is the way it is in trading. Now, let's go a little further. This is full session. Now, I want to show you our target. This is the ETH open last night, first trade after the bombing. So, and of course, anyone who's interested in trading might have kind of checked this out. Where do we open? Is it, the Acapulco cliff dive, or has this already been discounted by the market? So we open and we hit here. Now, this is a structured trade in the Trader Lab. Now, I didn't take it. I'm sitting here, I'm going, well, that is a long. Now, remember this right here. Remember this. This is now RTH today. Yesterday's low, Friday's high. Thursday's volume point of control, fair price. Friday's retail price, and then the low. So what do we get, you say? We get open here, selling, location, structured trade, long in the Trader Lab. Now, let's go. And you have to vet all of these for yourself. So now we're going to look for what? There's our naked volume point of control. This is a structured trade in the Trader Lab. And of course, it may not be your thing. It might not be anybody's thing, but it is something. Let's watch. Now, these are structured trades. They're available to everybody in the Trader Lab. So market opens. It's lovely right here. RTH open. There it is. There is yesterday's value area high. And this is the location for longs. Now, you don't have to take a long. You don't have to do anything. There's yesterday's low, Friday's low. And for all we know, of course, it could do anything. Let's follow the yellow brick road. First trade in Trader Lab, at least, and again, when I say first trade, it doesn't need to be yours. I'm just saying is I've shared 60 PDFs of structured trades in order to help traders develop and reverse engineer potential structured trades. Now, what is a structured trade? It is something you can learn, but you have to vet it or reverse engineer it. I've shared 60 PDFs of these ideas. And the reason I did it was, why should you guys try and reinvent the wheel? You're going to have enough challenges. If somebody hands you the answer key, you're still going to have to do the work to find if it fits your psychology, the range, and if you can master yourself. So we know the market is short. So this is our RTH open. Let's get back to that. And this is called VPOC migration. This is the first suggestion. Now, I'm looking for longs, and I'll do it anywhere. You know, if I get it, I do it. In other words, it fits my trade plan. So I'm looking for longs. So my first area is right here, the ETH volume point of control. If this is too high, and this is where high volume is, remember, this is fractal. This is too high, then what might be too low? That one. This is the same thing. This is the highest volume from Friday. This is the highest volume from the last auction, which is the ETH. I'm not paying that. Oh, well, then what? Well, I don't know. Let's see. Tom, what do you think? I don't know. I thought you're supposed to know. No, I know I don't know. Because if I know I don't know, I'm now completely open to what the language of the market is and what the participants suggest. But I also know what the language says. It says, that's retail. If I come to it and it's too high and I can't get above it, which might set up a long or a short, doesn't matter, subject to context. Context is the great mystery for most traders. Should I be getting long or short? What do I do? Well, if you're in Trader Lab, you know what you will do. You don't know what the market will do. Well, you are prepared. You know, well, it might do this, it might do that. The best you have in trading is maybe. Maybe this is too high. Well, where's my next location? Well, I got settlement. But the real key is this in the auction and Friday's value area low. 70% of the volume from Friday took place between the value area high and low. So, and the retail price from Friday. So we closed on the low. Settlement was here. Oh, it's terrible. And down we go. So I know this is too high and this might be too low, and I don't know. Let's look. So right here, I am shopping. And this is what trading is, shopping. You know, the old buy low, sell high concept, right? So market's coming down, VWAP mid, too high. I'm going to label this. I call it a variable high volume node. All I'm doing is tracking the migration of valuation. The auction, so you guys know, is the purest purpose of the actual function of the market. The auction is trying to figure out, what's this thing worth? What's too high? What's too low? What's fair? And that's why we get rotations. The participants auction. And that's the function of the market. Figure out what's going on. So if the market is short and you have the news, then what? Well, I would suspect if we get follow through sellers, first thing, and the market is already short, if we can't get lower, then the possibility is then get these sellers in. Buy stops are going to be over this, the opening swing high, which is there. Let's not forget it. I'm going to throw a little line on here just so we don't forget about it. Opening swing high. What did the opening swing high, you ask? Buy stops. Do I want to get short here? Oh, not me, but you might. Me, not so much. What I want to do is wait for my structured trade, and I'm willing to sit here and do nothing if I don't have a trade that has an edge. I'm not here to play a video game. I am here to extract dollars when the opportunity arises and also pay when I take stops. That's my job in this business. Absorption is here. Sellers are here. What's the language? Too high. I'm going to label it. I am doing is I'm following the behavior of the participants. So let's speak market. I don't use indicators. I'm not saying you can't. What I'm saying is if you understand what's going on, you might be able to deploy an indicator appropriately. If you're letting the indicator do the heavy lifting, then you're really like an appliance operator. This might as well be a microwave for you because you're just pushing a button. If it was that easy, we'd all do it. So maybe not so much. And it doesn't mean you won't have winning trades. The fallacy of everything we do is you don't have to have any process and you'll have a winning trade. So I know the buyers are here. There's my rotation. And I know the sellers are there. There's my absorption. So I got buyers, I got sellers. My location is here and my liquidity is here. So naturally, my impulse, I'm going to talk about impulse, is the voice in my head is saying, you're going to miss it. FOMO. But what do I know? This is too high. So if this is too high and I don't have a location, I'm just sitting here and I have anxiety. Anxiety that I'm going to miss the trade because everything in my plan says get long or go home. Location, location. Let's watch. Now, I'm looking for the long, but I cannot get involved until I'm in this area. I have liquidity sitting here. By the way, if you have questions, please post them. So I come down. Let's look at this. So I just tag my location. Now, when I see this, I have no idea. I mean, what's the difference between this, or any of this? How about this? There's my sellers. There's my absorption. There's my buyers. There's my resistance. Watch. So I'm just sitting here going, what's going on? So I see my sellers again. Now I'm still anticipating lower. I have nothing right here that tells me to get long, except I'm in my area now. So I'm, teeth are chattering. What's going on? Let's watch. So I still have nothing going on here. And I'm going, well, I'm seeing the icebergs over here, more selling icebergs. My liquidity is now here. My sellers are here. My sellers are here. My sellers are there, and my buyers are here. My absorption is there and there. I don't know. Here, still clueless. Watch. Right here, break high. Right here, entry. VPOC migration. This now is my target. And through the opening swing here. So this is my scale. So long to there, and then after this, we either break up and come back or keep going. And this now becomes a target. Remember, we hadn't hit it. And what is the statistics? You write these down, almost an 82% probability that we get there. Now, if you're putting your trade plan together, what do you know about this statistic? This is where I don't want to say excitement comes in, but how about the joy of having a process that makes sense? There's a 68% probability of getting there. Would you be taking longs in here with a 68% probability of getting right there? Would you be targeting this overnight volume point of control with almost an 82% probability? See what I mean? Anyway, long, opening swing high, into the stops, into this, and then helmet, watch. First trade, right? So ETH high, what was that you ask? 97% probability we take out either the ETH high or low. Now, here's an important question for this astute group of traders. What is the probability, you think, of getting to the ETH low, which was the open last night in the ETH? What do you think? Do you think this has a higher probability than getting to the ETH high? And this is where our continuation long was squeeze. Okay? And so 35, 38, all these are targets, right? So this is how you might put this together. ETH high, next target. And now it's trade management or whatever you're up to. And this is all subject to the plan. Let's come back to our targeting. This is a low volume outside edge. This is the first hour's high. We have still over 90% probability taking out either the IB high or low. It could do anything, not our job. And this is where the stops are sitting above Friday's high. Remember, we have a high probability of taking out either Friday's high or low. It's about an 82% probability-ish. And this is your microcomposite VPOC 65. That's also possible. Now, the other thing is, today, so far, is short covering. If we run out of the shorts that are covering, we might get our sellers, and we have a 30% probability of falling out the bottom. And we can extend lower. This is trading. Nobody knows. Part of the thrill. Now, we have another trade here I'm going to show you. Where is it? Yeah, for me, there's been two trades in here. So, gee, you might be thinking, wow, I want more than that. Okay, you can have more than that. You have to vet it. What does this say? Let's look at the language. Too low. Follow the yellow brick road. That yellow line is called the developing point of control. I call it the yellow brick road because what it is it's showing us the perception of price. The highest volume, think of it like shopping, wherever it is. If this is the highest volume down here and it's too low, if we leave it, then think of it like a mispriced product. Oh, you can't buy it there anymore. But if we come back there, we have to see what might happen. Nobody knows. So I'm going to label this. And so I have too low, too low, too low, retail, VWAP. Now, we have a trade in Trader Lab called VWAP to VPOC. It's one of those structured trades. So don't forget, we had the first long out of here. Structured trade. You can have as many trades as you want that have an edge. And of course, if you trade without an edge, then you're just playing a video game, and that's probably not so good. So this is a structured long. Let me show it to you. And the trade is called VWAP to VPOC. Let me try to get you a little more information on this one. Let me just try to find some structure for you. Yeah, here it is. Right here, we had our sellers and we had a sweep. This sets up a long from here using this as support. Now I'm getting into something a little more advanced, but what the heck? Show it to you. Here's the language. Sellers are here. There they are. Buyers are there. That's the absorption. There's the buyers. The sellers take a shot. They're sitting there. The absorption is here. Break high. And now, I don't know which side it's going to break out of. Not my job to predict. There's my extension. This is my support. Sweep. This sets up the long. Now, if you took a long from here, but let's assume you didn't, and you're just sitting here working on your crochet. So we know the buyers are here. Now we have this. The sellers took another shot here. let's draw another one of these. What I'm doing when I draw these things is I'm drawing where the behavior took place. It just helps me not to forget. Now, this little, where you see that HVN on the right, that little node is like the retail price in here. Down here, we have the same behavior. It's a node. So I'm looking now for the long. Let's just see where it might show up. See this? Where to come to? The high volume in here. So I've got this location and I've got another location down here. Okay? So VWAP to VPOC. I'm leaning on that volume right there. This is fractal. So what is this? What is this? You know, you see this box and you see this line. What does it say? This is the auction. And what it is the market's job is to figure out what's too high and what's low. And I know you guys think in time frames. I understand. I think not in time, but in something called fractal. They're very similar, except the clock is not regulating this. This is regulated by the participants. So I know there was demand here, there was the sweep, and look at that move. So if I come back either here or here, I'm going to be looking. And there's my location, VWAP to VPOC. This is along in the Trader Lab. Now, let me show it to you. And it's tricky. Oh, you didn't think this was tricky, did you? Do you run in here? Well, the VWAP is down here. What else is at the VWAP? Stops. So, and look at this, the ETH high. Isn't that interesting? So the market's coming down. I see the sweep. I am looking for counter rotation. Not here. I don't have location. Trading's like real estate. It's like location, location, location. There's a location. There's my liquidity. There's my absorption. I'm in my area. If you take a long here, you got to have your you got to be thinking about the following. You got long there. You got to be thinking about this, and this, because the buyers are here. So this is a good long. Now, if you entered a little too soon and you take a stop, which is perfectly okay, not the stop part, but that is okay because that's just part of this. For me, if I get in here, take a stop, I get in right here again. There's no perfection, but I know where my volume was, you see. So I know, and I get my absorption, I break high. And there's my sellers. My sellers are there, my sellers are there, my sellers are there, going to zero. My buyer, right here, I see icebergs, I see the liquidity, and it's right here, I don't know. Right here, I'm suspicious. My sellers are there, and my sellers are there, and I break. As soon as I break up, I got my long, and I can be buying it there or right on the run, and this is where I'm going. And then I'm, it's trade management. Once we break below here, and this, so for me, that was it. I don't have any more trade. You might think that, that we just keep trading away, but at least for me, the idea is to just take the trades that have an edge, and then that's it. Now, I have yesterday's high and low open, so I know I can come under yesterday's low, and if this was short covering, then I might be out of buyers. I have no idea. Let's see if there's anything else going on here. No, that's it. So I have no more trades right now. Pretty boring, huh? Oh, yeah, it was profitable, though. Very profitable, but not a lot of trades. I wonder why we might maybe prefer profitability over action. What do you think? You have questions? Post them up there. How you guys doing in YouTube? Welcome to the Trader Lab. This is about the business of trading. There's really anything more than that to this. It's not complicated. It's just random. Does that make sense, guys? So what is this business of trading? How do we get to maybe create a business plan and actually, come to work? Well, that's what the Trader Lab is about. Okay, now we have basically a short squeeze. We have a target up around 58.59, which we achieved. And for now, I don't have any longs. I'm not, and that's not a recommendation. I'm just hanging out. My day could be done if nothing shows up. I don't particularly care about that. I just wait for my next trade. So what is going on now? Is it possible that we squeeze the shorts out and we have to watch how far back we come? Because if we don't get new buyers, then all we had was a squeeze. And then we have to think about turning around or standing aside. So right now, no trades. Do you guys have questions? We're just waiting to see what develops. And thanks for visiting. Please give a like if you're in YouTube. This is really about the business of trading. It's just really about sustainability. Lee is asking me in YouTube, hi there, is VHVN to VPOC mean reversion? Depends where it is, Lee. So if VPOC is above us, and you're asking if VHVN to VPOC is a trade, not at the moment. See, the problem with all of this is it could be, and this might just give us a rotation. Let's come back and look at this. So here's your VHVN and liquidity. Now this, let me just look over here. Yeah, this is not anything other than a potential rotation. When I say not anything, it could be anything you want it to be. But it has to be vetted, and you have to determine if you have an edge. What is the current context of the market? Are we going up, or do we have long liquidation? Is this a trade we ought to be taking? Where might we be going with it? Maybe VWAP? And then what might happen at VWAP? Selling, perhaps, in mid? So there's no mechanics in this. The number one piece in this is the context. Now, the market does rotate, but again, subject to each individual trader's plan. What are you trading for? Now, the you is the collective you, okay? Not you individually. Are we trading from here to here? Is that worth the risk? I had the absorption here. You can see the icebergs. And I have a micro trigger here. I have a location, and I have this, and maybe even this. Should I take this trade? Well, if it's in my plan. Now, I'm not a scalper. It's just too much trouble. So I just tend to get on trades and go for larger swings. I have found, and I'm only going to talk about me here, that my risk is pretty similar, whether I'm going from here to there, or going from the low of the day, which is luck, all the way across the range, for a 20, 30-point move. I'm a little more inclined for the larger swings. Doesn't mean I can't trade this. It just means for me, risk reward is more important to me than activity. So at some point, you kind of find your groove. And it's not saying there's a right or wrong in this. Some traders are going to be grooving, if you know what I mean, with this thing and dancing with it, kind of like a tango, So it's not quite. I dance, but I try not to get stepped on too much by the market. You guys have questions? I hope that answered your question. Please give a like, by the way. Ben, how do you stop making errors? Well, first of all, if you come to the Trader Lab, I think it can help you with that. First of all, it's human to make errors, and that's because of emotional triggers. So we all make errors from time to time. The key, of course, is less errors. And, right, but being human still, we're always open to something. But what I have found, and this is one of the things I shared in Trader Lab a long time ago when I decided, agreed to do it, was that we need to understand the business we're trying to be in before we can ever solve the issues that being in this environment stimulates. So it really takes a broad understanding of the actual business. We're in a gaming business, so we're living in certainty and uncertainty, I should say, where we're only comfortable in degrees of certainty. So operating in uncertainty is a psychological impediment for us. And there is no plug and play mechanical process. So we're always in randomness. So the trade plan is the solution. It might not be the solution for anybody specifically, but the trade plan is based on tangible statistics, not emotional triggers. If we are making a lot of errors, then it's really a function of, how do you define an error, by the way? What is an error? Not taking a trade, bailing out of a trade, taking a stop and not taking the next trade. Define your errors. What are they? And then how do we solve for that? Well, that's one of the reasons the Trader Lab exists. We all make errors. So how do we solve? Or do we just keep making errors? This is not a business of willpower. This is a business of probabilities. Your willpower, or anybody's willpower, unfortunately, is not going to make the difference. The solution lies in the process. And that's what I've shared in Trader Lab. It's a process. How do you build a business model? If we were building a manufacturing business, we would have probably a pilot program, a proof of concept, and then the ability to manufacture that, whatever it is, that die cutter, whatever the heck it is, that thing. And then we say, well, if we get this thing in volume, is it going to be profitable? And even though I have expenses and overhead and commissions and losses, and we're going to, just like the casinos, cocktails, ticket to the buffet, and paying the gamblers, can I still make a profit? That's the job. And then the answer shows up in the work you do that has a statistical edge. Then you put the trade on, and whatever happens, happens. That's just the business we've chosen to be in. It's not the most comfortable business to be in because we're working in an environment of discomfort all the time because it's uncertain. We'll never achieve certainty. So if we can't have certainty, then all we have is uncertainty. If you have only uncertainty 100% of the time, then what do? Let's watch this behavior here. And these are not trade recommendations. We're just tourists. This buyer absorbed here. There's the icebergs. This came back in again. And the thing becomes, who is stronger here? Think Pac-Man. Are the sellers going to eat up these buyers? Or are these buyers, if they interact, going to consume the sellers and then potentially revert and then maybe even come back here? I don't know. But these are not trades. These are just curiosities. I have no trades here, at least from the structured point of view. So let's watch and see what happens in here. Sellers are in control at the moment, guys. So if we get any kind of rotation at the moment, it would be counter-rotational, not necessarily initiative. So we want to see what happens right here. I mean, just as a curiosity for potential rotation, okay? Not a trade. We're just tourists. And where's the current low of the day? It's here. Where's yesterday's low? Well, we haven't gotten yesterday's high. This is yesterday's low. You got to be aware. So let's see what happens. Well, Ben, once we couldn't get back above VPOC, the language of the market is saying it's too high. Now, the joy of all this is, where's too low? Don't know. And this is where developing traders can have a real problem. If you start buying the mid, buying the liquidity, stop, 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 right? You'd be taking sequential stops. Do you, anyone, have an edge here to get long to come across this range to here? It's not my trade. I'm just asking. Now it's a 10-point potential, right? Let's see what it does. And we could come up to this outside edge. Let's talk about the auction. This is too high. I'm not paying that. Get out of here. And you notice everybody packed up, got into their cars, and left the store. Think of it like shopping. These rotations or distributions of volume are too low, too high retail. But if the market won't pay this, then it's going to try to find an outside edge somewhere, and this is part of the thrill, to do this. So if the low volume node, this is now resistance, support would be down in here. And the potential is to do this. So if we're looking at that long, which is not a long, I'm just sharing a concept with you, where might it go? There. And then where might it go? There, maybe here. Let's see what it does. And again, this is not a trade recommendation. This is advanced, and you never need to mess with this, because you may find you take a load of stops trying to trade with some of these processes. And our job is not to be playing a video game. It's only to interact where you have an edge. Where is this an edge? Or a long? To where? Right here, we have to be, you might get mechanical selling, retail traders right here. If you're taking a long, you have to get risk neutral. This is like running a shoehorn in here. And then if we can squeeze, where's the stops? There, there, there. Sellers are there. See the icebergs. And above here. What I tend to think about is if I'm trading rotations, and these aren't recommendations, I'm just giving you some thought. If I get long here, I want to squeeze out the sellers in this leg and the sellers in this leg. Where are their stops? They're right there. So I know I have sellers there, break low, sellers are there, trigger, resistance is there, break low, 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 break high. Stops are there. So the closest place for me where I can get a swing is this leg for potential scale right in front of this thing. So this is like, well, if you can get long here, you got to get scaled here. Then if we come under here, the trade goes to the happy hunting ground. If it doesn't get under here, then the sellers here, the sellers there, and the sellers here, right there, stops above here, are going to get thrown under the bus. So this is now important for continuation. This is just a long, and it's not a long. It's just something you can look at and think about. This, if it's a long, it's only for someone who has vetted it and understands why it would be a long. And those of you who have not vetted it and understand how the pieces fit together should just be thinking about it. Nothing more than that. You go, well, that's interesting. And then maybe you vet it and you say to yourself, does this have a potential edge? Now, the thing with this is we are in a long liquidating market. So here's a question for you. Is this with the trend or is this now counter? What do you think? Is the trend up or is the upside done and now it's long liquidation? Do you want to be short? Do you want to be long? Or do you want to be in your Barca lounger with your pina colada, pondering what you're going to get at the buffet? Papish, is that question for me? Sorry, I didn't see that. Lee, as far as what to do and what not to do, that's a function of vetting. The structured trades that I share are a template of behavior. The idea is that the market operates in fractals or multiple time frames, so it's like Matryoshka dolls, it's inside itself. The longs were all up to that VPOC and possible, and the resistance, which is really right near the high of the day. Currently, so what do we know? The market was short. We hit a key target in the ETH on the open of last night's ETH after the news on the bombing. That was the low. So we saw the buyers come for it there. So it's not unreasonable for the buying to continue into RTH open. And then we had a location for the trade. So all of that fit. If the shorts are squeezed out now, then we have to be conscious that that long side trade might be done and that now it's the longs who are in trouble. And then it's either get short or just go into the Barca lounger. There's no trade. So I will tell you now, for me, I'm a little more relaxed about this and patient. I take the trades that I think are aligned with what I perceive to be the condition of the market, which this morning was squeeze. If the squeeze is over, then I can go into two-sided trade, or the longs who came in this morning then could get thrown under the bus. So it's kind of interesting. There's also a 90% probability-ish that we take out either the first hour's high or low. Nothing says it won't be the first hour's low, you see. So you just have to follow it. Location still. These are not trades for me. I'm just telling you. What I'm telling you is this is location. But it's not a trade. I'm coming below where my buyers were aggressive. Which one of these is going to be the right one? It's always a great question. I have nothing to do here. So, nothing except to watch. And I have other trades. I'm going to tell you what they might be. First of all, we have to see as we come back down here in this outside edge if we get rotations. Right now, the market is short. And the longs are getting that sell stop. So it's like, thanks for playing. They're getting a coupon to the buffet. The absorption is happening here. Let's watch the order flow. See if we can see something in order flow. Buyers are here. Buyers are in here. This is still support. You see the buying? You see the buying? So we have to see what happens here. There's the absorption. I'm not saying this is a long, I'm just saying we have to watch it. You guys have questions, by the way. Please give a like if you're visiting at YouTube. So you guys are probably glued to your TVs this weekend. I was. You know, when you have something like this going on, uh, but for me, the whole thing was predicated on last night's behavior. Last night's behavior, coming to a key location in the auction, set up at least the morning trade, which is short squeeze. Now, we had some conversation this morning in the Trader Lab about the shape of the profile. And there's a lot of information out there on profile and auction market theory, which is how the market works. But the other thing about how the market works, it's trader behavior. So it's not only what the market or the auction says, but it's retail trader behavior. Most retail traders, as you know, do not have sustainability, and that's because most of them do the same thing. And they all have winning trades, but they don't have sustainability, and that's because they don't have an edge. But they have winning trades. So if the market is giving us information, then can we use that information and build out a statistical probability that favors us? The answer is yes. Then after doing that work, we can bring that plan to the market, which is 100% random 100% of the time, and then deploy that plan and develop the confidence then to execute it because we have tangible metrics, which helps us manage the emotional triggers, fear, fight, flight, all this, down to another location. By the way, I have no longs. I'm just a tourist like you. I'm watching the behavior. What I'm seeing is buyers are being absorbed by the sellers. I'm seeing all the selling delta, and now the buyers are not making any headway. It's the exact opposite of what it was this morning. Notice the sellers. Where's my buyers? Sellers, sellers, sellers. There's a buyer. Thanks for playing. No buyers, sellers, sellers. What's the market doing? And is it making progress or being absorbed? It's going south. So maybe that means no longs. What do you think? Do you want to be long? As Dirty Harry says, do you feel lucky? Now, how about this? Do you want to be short? And if you want to be short, where might there be a short? Where might there be a short? What is this? This is support, isn't it? What is this? This is support, isn't it? If I break below this, what does it become? What do you think? Now, this, of course, is your mid. You know, that's lovely. VWAP is up here. VPOC is above us. We are rejecting everything. Let's look a little bit further up here. We're outside of this distribution. Remember, the outside edge was down here. Remember, it was over here, and we are below it. What does that suggest? Does it suggest maybe lower? Now, if this is not vetted, you don't have a trade here. But I want you to concentrate and think about the language. What's it telling us? Buyers are here. Buyers are there. You can see them. But what's going on? My sellers are still in control. I mean, look at the buyers. Where's the muscle in this thing? There isn't. Buyers are here. Sellers are in control. All I see here are short possibilities now. And this is an advanced process. It's not a structured trade per se. It is an advanced short. But it's not in the structured trades. Let me show you where we might go with this thing. And remember, first hour is high or low. What's our probability? You wrote this down at the top of the stream and nobody knows. It is 98% probability we take out either the previous day's high or low. And, I'm sorry, IB higher low, and taking out the previous higher low, 82%. Well, I noticed we did not get to the previous high. So where does that put us? It's the longs who have a problem now. Let's see what it does, okay? This is an advanced structured trade. This, not so much, because this was your key over under. See, once you break below it, this is a structured short in the Trader Lab advanced methodology. This is something that you could learn in Trader Lab, but it's not in those PDFs. Actually, it is, actually, now I think about it. But I don't concentrate on this. Developing traders really just need the broad strokes, and you can do very nicely. If you can't do the broad strokes and the more fundamental, and fundamental doesn't mean simplistic, the fundamental processes prepare you for advanced processes. Anyway, this is the last short, but it's not one of those things that's out there. But if you've been in Trader Lab for a while, you could take this if you've vetted it. Otherwise, no. So what this is, if you get the short in here, your stop has to go there or there because the buyers were absorbed there. That's where your sellers are. And then you're going to take these guys out. You're looking for the statistics here. Okay? So that's where we're trying to go. Get the stops out. So at least, and that's not a recommendation, get the sell stops out under here and maybe fulfill the statistic of yesterday's low, which is there. So that's the target, not a recommendation. Is this making some sense? Is this helping a little bit? How we doing, guys? How we doing in YouTube? Is my VWAP set to 1800? Kevin, I've got a full session VWAP starts at ETH, runs for the full, wherever it went, this. And then the RTH VWAP is up here, and that's RTH open. So I've got two of them rolling here. But I'm looking for the bottom to come out. And that's only because that's where the fuel is. Market trades in the stops. So whoever gets offside, and remember this morning, who was offsides? The shorts. Who got offsides now? The longs. Market goes up to go down. Market goes down to go up. So for me, this is the only short I would be on at the moment. But that's just me. I'm not aggressive. I'm just sort of, sit here and sip my mint julep and just do the trades that I recognize, that I've vetted, and I have no sense of urgency. I'm not saying you guys should do what I do. Anybody can do what they want to do. There's none of that right or wrong thing. The answer is always in the metrics. It's not in anything else. Now the thing about this trade here, this short, this is an order flow based trade in alignment with the auction. I know this was a key location to come outside, and then we were looking at that, right? To come back in. In fact, this was the long out in here to come back there. You can't get out there and this becomes too high, then this is where the stops are, right here. And there's our buyers again right here, and now we can't get back above here, then it's all starting to come apart. And then again, subject to your plan, you could be selling this or you could be selling this. Now, for me, I want it to break. I want it to fail. So this to me right here, which was too low, think of it like resistance. If this is too low, now this is too high, this is my support. If I take it out and my liquidity goes, then my next location is going to be here and out the bottom. So anyway, that's the only short I've taken. I should say would take, because I wasn't able to take it. This one. There. So that's an entry for me. Not saying it's a good idea, I'm just saying it is what it is. How we doing? Hope you're getting something out of this today, guys. Please hit the like if you're visiting in YouTube. Subscribe to the channel. This is trading in fractals, and this is auction market theory using a volume profile as a chassis. So now we're looking to come out the bottom, not a recommendation. This is yesterday's low. Remember, we have an 82% probability of the previous high or low. We also had a 97% probability of the ETH high or low. We got the ETH high. And we have a 98% probability first hour's high or low. So we got, you might say, and that's the first hour's low. So we're going for this. We're going for this. And after that, I'm not sure what we got down here. Oh, we do have more. The ETH low is, I think, right in here. So now it's trade management or targeting. So your targets can be here, here, here. Once you're under here, then it is trade management all the time. So this, is the last short for me. If I was able to get on it, I think it was here, whatever it is. Can't remember, but it's right in here. So I'm okay with that. See, this is more my kind of thing because I know I trade with statistics, and of course I take stops too. But this is where I get paid. Not messing around with this stuff. That. So I'm just saying is that's one way to approach trading. Or you can be extremely active. What I like to say to traders in Trader Lab or elsewhere, it's not frequency of trading. It's being very patient and trying to align with the advancing side. And the market will change sides, from buyers this morning to now sellers. So who are the sellers? Well, the sellers are the longs who came in this morning, and then we have new sellers. So we have new shorts, but the market goes up to go down, and the market goes down to go up. So we went down, opened lower in the ETH, squeezed. Now we got the longs. Now they're under the bus. It's an equal opportunity process. So if you're going to be, quote, a trader, do not get married to one idea. It's very important that you're gauging the side that is currently in control and to then define conditions that will suggest, and that's the best you got, maybe, that the condition is changing. And we won't know it's changed until hindsight. I don't try to pick the high or low of anything. I just follow my trades and, whatever happens, happens. It's just the way this is. So the last short would be here, and then we're going down here. Now, once we get under here and we're fulfilling statistics, now it's trade management. We'll talk about trade management. Okay. So now we are in our target, and there's our absorption. There's our sell stops coming out, and there's our buy icebergs. So now we want to see how the sellers do in relation to these buyers. When you have sell stops coming out, you'll often get icebergs absorbing. We want to see what happens now. Notice what's happening here. This trade could be done. You don't have to do anything more than this. Are you okay with that? Very important what happens right here. Because what did we just do? The longs, where were their stops? Under yesterday's low. So for me, this trade, I don't know if that's okay for you. Me, I'm quite okay with it. And it doesn't matter to me if this thing just rolls down and keeps going. If it does, I have other ways to get in the trade. We have another trade in Trader Lab called the IB continuation trade. Now, there's a couple possibilities we got to be very aware of here. If we can't get selling below here, then the market can potentially revert. So this is important. This behavior right in here and right up here is very important. I'm getting the icebergs. I have the liquidity. What we don't know is the sellers that showed up here, are they going to show up over here? No way to know, not our job. So we have two trades in Trader Lab. One's called the IB continuation trade. It's out here. And the other one is called the IB failure, which is a reversion trade. So far, no long. Let's see what we got in a higher time frame. So currently, I lost my place here. Where are we? 96, 97-ish. So stops are under this. This is Friday. And we have more stops under this one, which is maybe 70-ish or something. If we get below there, then we're coming back potentially to 68. No way to know. Not my job. My job is to get in alignment and wear a helmet at all times. So let's watch. Overnight mid statistically has a 75% probability. See if there's anything else there. So overnight mid, yesterday's low. These are high probability statistics. The way I tend to think about this is I'm not, I just manage my trade. I take what my plan extracts. I'm no longer concerned about getting all of it. That's a psychological need. It has nothing to do with the business. I never get all of it. I don't know where the high or low of anything is. Somebody else can figure that out. I haven't. So my job is alignment, structured trades, statistical probabilities based on metrics that you have to vet, and then whatever happens, happens. Doesn't matter what happens from here. That short, that trade would be over, and it's ring the register, go back in the Barca Lounger. Trading doesn't have to be complicated. It can be simple, but it is random. And we confuse randomness with complexity. The need to predict. It must be very complicated. It's actually not complicated. It's just random. So how do we know that the market is going to turn here versus there? How about you can't know? What we do know is this is the IB and we have a structured trade right here in the Trader Lab, right here. And we can sell this. And then you've got to get risk neutral before it comes here. This is not a trade recommendation. Let's look at this. I'm going to show you this little idea, not a recommendation. This is called the IB, and this is a low volume node. This is that naked volume point of control that our long was based on. Too low. Well, if we break below it, is it possible that, and we have an outside edge of this, is it possible maybe this might be too high? What do you think? I don't know. Let's see. These are not trade recommendations. It's just maybe. Outside edge, low volume node, This might still be too high. No clue. Liquidity is over here, and this trade would take a stop. Okay? Just the way it is. So what we did is we got below, got our stops, and it looks like we're going to come back in balance now. So we have to watch. And that sets us to potentially come back up here. So in Trader Lab, this is a potential short with a stop. And if we get above this, we can come back to here, up to this. Since we're above it, then the potential is to revert here. We got this, and we got this. So we got these areas. These are not trade recommendations. So let's see what it does. Here's the thing to know. We're outside of this area. We came below. We got the longs. Once those stops came out, that was absorbed. So that puts us back into this. It's just the way it is. Are you guys tracking? Lee, when we couldn't get back above the volume point of control up on top, that was saying it was too high. This morning, this was too low. That was our long this morning. So we squeezed the shorts. Now we abuse the longs. And if we can't continue down, once we come across here, right here, then back here, everybody's getting equally abused. So once this short failed, this sets up a long right here. It's a reversal. You know, it's now changed. The context is two-sided. So this I can see as a potential short right here. And, you know, depending when you took it, you would be able to get scaled. So this is your sellers. This is your trigger. Your entry would be in here. Your stop would be over here. You would have a scale if you entered it properly. And I don't know, you know, how traders manage their trades. For me, I look at what's called triggers and retracements. Stop would be above here. You would have a scale. You'd scratch. Now I said you'd take a stop. Well, call it a stop, but it would be a scratch if you're following a two-lot process, which means getting risk neutral on the first contract. It's like buying a ticket to ride, and then assuming you get risk neutral, you end up scratching the trade if it fails. Our next location, remember, is here. So if you took a long in here on a failure, which you could, your low volume node is up here and your high volume node is there. This could be your trade, and there's your sweep, which suggests counter rotation. It can also, and look where else we came, mid. So this is okay for me to target and forget it, you know, and then either I have a runner because I anticipate sellers here, and they might be right. This might be a great short to come all the way back. So the scale has to take place because of resistance. If I can get above the mid, I can continue to squeeze. And my VWAP is up here, so I know if I can get above the buy stops that are sitting here. Remember, think like a retail trader. Don't act like when I can continue. I hope that's making some sense. This is just trading. I don't know. Are you guys following? How about a like if you're visiting in YouTube? So we want to watch this behavior up here, full session VWAP, regular VWAPage, and then we have to see where we come. So what have we done today? Squeeze the shorts, threw the longs under the bus, equal opportunity. How do you trade this? Trade plan. How do you know what's going to happen? You don't. How do you operate in that environment? A trade plan. What do you do when the market and your plan are not in alignment? Work on your sewing kit. What else do you do? Get back in the Barca lounger and relax. Do you know where your trades might show up? Yes, you do, if you have a plan. Do you know what's going to happen here? No, you do not. Is this a structured trade? Yes, it is. We are under here. What happens when we break above the IB? It now becomes reversion. Where might we go on reversion? Remember, there's two trades, the IB, the IBC, and the IBF. IBF is a reversion trade. Where does it go? Back to high volume. Where is it? Well, we got some sitting here. We got stops sitting up here. This sweep suggests counter rotation. The way you can operate in this is you just take a long and you get a scale, you know. And then you're getting all these sweeps up here. This suggests counter rotation. You could be out of this trade. You could be handling a runner. You could do whatever your plan says. Would you be okay if you got scaled, scratched, got long, stop under here, scaled there? You got enough room? Yes. And now you're managing your trade. Where are the stops for the longs? They're right here. Do you want to put your stop there? Maybe not. What about there? Let's see. What do most of us do? We put our stops there. Why do we do that? Risk adverse. Is that the smart thing to do? Only in hindsight. So how do you deal with the maybe part of this? Maybe you have a process that you know over time gives you an edge. And maybe you have your stop under here. Or, here's the other part. When you get this, we are anticipating the counter rotation. And you have this, you have this, you have this, you have an outside edge of a distribution. You're out of the trade here. Which is it for you? The answer is not in hindsight. The answer is in vetting and understanding market mechanics. How does the market work? Why does it do what it does? How can you get in alignment at times with it? And what is your qualifying factors to put a trade on? How do you get risk neutral? How do you manage the trade? What are the potential constructs that we have to deal with? Well, we do have to deal with this, and we do have to deal with that and that. That's what you got to deal with. After that, toss a coin. Does that make sense? Well, Boss Man, if you're not in Trader Lab, you're not going to that's what Trader Lab is for. There's no cost for this. There's a link in the bottom of YouTube. Trader Lab's available to everyone. But it is a business-oriented community. It is not romper room. You know, there's no these influencers and somebody to, here, click the link, they make 25 cents. There is none of that. This is all about the business of trading. Notice where we come. Remember? And where's our outside edge? Wasn't it under here? Not over there. It's over here. Now, absorption is here. Either this holds or not so much. That's it. I'd still be quite okay with this. How many of these do you need? I don't know. Me, not that many. 10 points here, 10 points there, plus scales. Even on just a 2-lot. Even micros, it doesn't matter. Profits are profits. You don't have to be chasing the market around. And if you're doing that, you're playing a video game and you're gambling. Probably not a good plan, in my opinion. Personally, I just take pieces. I follow a plan. I don't know what's going to happen. And neither does anybody else. So let's not worry about being right. because you can't. And the other part is, what's going to happen next? I don't know. So if we know we don't know, then it's not about being right. It's just about trade plan and statistical probabilities. Then it's, I don't know. What's going to happen? I don't know. Where might it happen? Here. What might happen? To there. Then what? To there. What happens here? That. What does that tell me? Either get out, or my plan says hang in here with a break-even stop or some other trade management process, right? So that's what I know. That's it. Don't need to know anything else because I can't know anything else. So not my job. I'm just as curious as you are. I'm going, what's it going to do here? I know this is obstacle. So like I say, and this is a trigger. So this is a short if you want to be short. This is a short if you want to be short. That fails. This becomes a long to there. And then this is warning Will Robinson for the longs. You could be out there. If you're trading rotations in a shorter fractal, you could be short here or there, right there, against this. And where you're trying to go? Back there. And these aren't my trades. I'm just, why would I want to bother with this, you know? Well, I could. Why would you? Unless you know you can trade this because you understand it. If you're going, and you're going to ask me, how do I know what it's going to do? Let me give you the answer. I don't know what it's going to do. I know what it might do. I know where it might do it. And I'm already looking for behavior at locations. So remember, short, scratch, long, scale, selling, exit, or short to where? To there. See it? I don't want to trade this. I can. Too much work. This is okay. So, you just pick your trades. It's not complicated. It's just random. Anyway, guys, I hope you get something out of this. This is Trader Lab. You're all invited. TV7. Hi there. Today's mean reversion. Yeah, it is reversion trading. But we may already be done with the longs, This is potentially only counter rotations, and maybe south. But I think based on the behavior that it's now going to be two-sided and the market's going into balance. That part I don't know. We already got yesterday's low and we're back inside. So potentially we can come across here and squeeze and go higher. Now, higher doesn't mean out the top. It could. There's still stops sitting above. What we've done is we squeezed the shorts. We threw the longs under the bus. And now we can come back here. Or some other location, depending on what happens with the high volume. So this is rotational trading. I know it might sound a little confusing. And you know what it is? Because it's random. That's part of the thrill. By the way, this is what the Trader Lab community looks like. If you're not in the Trader Lab and you're visiting in YouTube, I'm going to suggest don't miss out. There's no cost for this. It's professional, though. It's not romper room. It's about the business of trading. There's a lot of collaboration, data mining, a lot of work being done in here. And it's about researching structured trades, leveraging the collective experience of the community. We've all walked in the same shoes. We've all done the same stuff, some of us longer than others. And also, it's, your experience, you have trapped equity. The thing about it is, are you going to continue doing what doesn't work, even though you have winning trades? I call it trapped equity. It's the investment you've made in experience, equity thrown wherever it's gone, and lost time. Most of us, because we have winning trades, are just going to keep doing the same process or derivatives of it. But, there's no edge. You are going to have those winning trades, but no sustainability. This is the library of webinars in the Trader Lab. Thanks, Ned, for curating this for us. Primer webinar, about 33,000 views. It talks about the business, Meet the Trader Lab. You might want to check this one out. Stop gambling, start winning. Gambling is great. Just go to the casino, because at least you're gambling, and get the cocktails and the ticket to the buffet. Maybe you'll get lucky. Meanwhile, the casinos don't depend on luck. They just depend on edge, even though they pay to gamblers. I'm just saying, that seems like a pretty proven business model, don't you think? Well, in the Trader Lab, we're taking a proven business model, not making it up or guessing. And what we're doing is we're applying gaming theory to the business of trading. And then either it works or it doesn't work, and it does or doesn't. But you'll know that you have an edge under certain conditions. This is what the Trader Lab is. And if you're interested in this, come to Trader Lab, use the link in the bottom of YouTube. It's available to everybody. You might want to check it out. There is no cost. Please give a like if you're getting something out of this. Trader Lab is here if you're interested in it. Oops, something just went a little strange here. Okay. Hope you're still hearing me in Discord. Are we okay in YouTube and Discord? So let's see what we got. See how this set up a short rotation here? You would learn this in Trader Lab. This has alignment, has the sweeps, and we're in rotational trade. Where's that IB, you're asking me? I know. Where is it? It's here. Now, this is a very tricky trade here because of where we are. And you have to decide whether or not you want to be trading this. I'm okay with this to there. After that, it's either short or park. You don't need to be flipping like a flounder on the dock. So let's assume if you took a short, you got a scale, you scratched, you took a long, you got whatever, and you're out here, and now you don't take a short. Or you take a short and where you're trying to come. Back here. Right there. Right there. This is all structured trading. Now I'm getting very advanced. And again, you don't need to be doing this. I think the broader strokes with the larger range and more structure is where developing traders ought to kind of, put their harpoon and like take a stand on saying, I'm going to learn how to do this. I'm only going to trade with an edge. I'm not going to gamble. If I'm going to gamble, I'll go to casino, get the cocktails and the ticket to the buffet, but don't gamble here. This is business. If you're interested in the business of trading, use the link in the bottom of YouTube. Visit the Trader Lab. It's no cost, and it's available to all of you. And I think you might find, if you've been waking up in the same place with Trader Groundhog Day, random winning trades, but losing over time, then all that means is you don't have an edge. And if that's the case, use the link in the bottom of YouTube, visit Trader Lab. Maybe you can change your outcome if you're not getting the success you're striving for. Thanks again, guys. Don't forget to give a like on the way out, support the stream, subscribe to the channel, and I look forward to seeing you guys tomorrow. And thanks for visiting the Trader Lab today.